Okay, we are live. How is everybody today? Let us know how you're feeling about crypto.
Hey guys, doing? My apologies about yesterday. Obviously, it's one of those things that uh, had to change. But hopefully we get a good turnaround today. Let's see how it goes.
Hopefully, yeah. So, I've got about 7,000 windows open at the moment. Still won't be as many windows open as what Maurizio has, but
Not really, man. I just have it for here, but I learned to close things down. Otherwise, it stays on my brain. You know what I mean? Like that's something that I'm improving as I go. Having so many freaking windows open is just, yeah, not
it
sustainable.
melts you down after a while, doesn't it? So,
Right.
okay, okay.
All right, let's get into it.
Strap in. The Hamshaw's about to
Oh my God, there we go, man. Tell me about it. All right, shoot.
right. Okay. So my question is, if you're a bear
Mm-hmm.
and you're feeling bearish
Mm-hmm.
and you're, oh, this is all over, this is all over,
Mm-hmm.
what price level are you looking to get out? So when I look
Get
at,
out, get out or get in.
no, to get out, you're a
Okay,
bear, right? So the
right.
way I'm
Okay.
looking at this, particularly this here, is
Yep.
as a relief rally up to that level of 114 that has acted previously as a pretty sustainable support. And then we got a small
Mm-hmm.
downside deviation, which has been the story of the cycle. Accumulation, downside deviation, off to price discovery.
Correct.
Only we had that event. So yeah, for everybody really, if you're a bear and there's plenty of bears out there and you're, this is shit, it's all over, it's finished, then what do you think is you know, the capitulation price? Because if we look at this from the Scott school of things, right? Then we'd go down here, we're fucked.
Mm-hmm.
Here, it's on.
In a way, I have a different mind. I have a different take from that.
Hmm.
But yeah, below that, I'll tell you why. When I put out my shot, so below that line,
Hmm.
I don't think we're still fucked, but we on the verge. I think that's kind of in crypto, like essentially everything that happened 2 weeks ago is being
Hmm.
painful, but it hasn't been painful enough yet. Okay, so especially for Bitcoin, right? So obviously, if you're a bull. So thinking from those two perspectives, I think you're on the right track. So if you're a bull, right? If you're buying,
Hmm.
where is the price that you say, fuck, no, no more. I'm selling. Like I'm not holding that. What do you guys reckon? Like if you buy now at 110 or you bought probably at I don't know. I don't know where. But if you're a bull, what is that price that you say, shit, I'm out? So Todd says 105. Who else? 100. Yep. Okay. Now, good question for Ian. Now let's take the other approach. If you're a bear, what's your target price? Like, is any bears here? By the way, I don't think so. But I'm just that would be a really interesting question.
That would be an interesting question. And whilst that's
Mm-hmm.
mulling over, if we take a look at the monthly, let's get rid of a few of these wiggly lines.
Mm-hmm.
Then we've got a pretty clearly defined range that we're
Mm-hmm.
operating in. on the monthly.
I agree. So Melinda says 80. Is that Melinda? Is that as a short or as a long bias? Short. Got it. Okay. Cool. 80. Okay. Interesting.
I think I just need to change my screen because there's something else to bring in here. Let me get to where is it? So my interpretation of this open interest is that we have longs that are currently paying shorts, but the longs are fighting against the spot that keeps on selling. So we've got this kind of grinding up, this slow grinding up type of motion in the open interest and in the price. But it's this bit here that makes me, well, it adds a layer of confusion that I'm not quite sure how to solve.
Yeah.
Because it's the one piece of the puzzle that's like, this is fucking everything.
I'll go through it, but then have in mind that the open interest, I'll go through a few things. I'm not saying that reading open interest is tough. You know what I mean? Because remember that open interest is the amount of contracts that are open at a given time. That means shorts and longs. Okay. So it doesn't give you the direction, you know, the directionality. So you have to guess, or you have to have an educated guess in terms of, depends on how the price action is moving, funding rates, things like that. You have to guess if they are longs or shorts opening. You know what I mean?
So there's nothing that we can layer over any of these to give us that direction.
No, it's tough, you know, unless you know what I mean? So have that, it's same thing as volatility, or, you know, ATR, the average true range. It's just the volatility, you know, of the market that doesn't give you directionality yet. You know what I mean? So is the compounding things of what you'd put one thing on top of the other and say, okay, this is the likelihood that shorts are being open or longs are being open. Then what you want to do is, if you figure out as shorts or longs, then you either join or you wait for capitulation for those positions, you know, liquidations, and then you jump in. You know what I mean? That's kind of, in essence, on a nutshell, the summary, right? But I'm not, it takes practice, right? And then obviously that's why I looked it up in the smaller timeframes first, because the higher timeframes is harder to, you know, 6 hours daily open interest is really hard to read, because it's just the sum of everything that happened during the day, open, long, shorts, all that sort of stuff. So the only good read that I'll show you, like, that's really, like, open interest is really handy on very, very small time frames. I'm talking about 1 minute, 3 minutes, because you could actually see what's being open. I'll go through it now, and that's that. So that's kind of you know, let me show you a screen. So, but then Ian, you mentioned something interesting that you didn't answer. Like, if you're a bear, if you're short, right? What's your target price?
Well, I think it's around that 114. I see that as the really pivotal level, because if we can recapture that, then we're bullish. If we can't recapture that, then it's acted as an almost textbook relief rally.
All right. Interesting. All right. I did a small video yesterday, right? That obviously we did have. Let's go through the whole analysis, right? Because I do have something interesting to talk about today. So let's start with Bitcoin, right? So this is what I was looking at yesterday. So these two candles here, right? Obviously, this is weekend liquidity. So we know weekend liquidity is kind of thin. You know what I mean? It's not very sustainable, right? In terms of institutional buyers. Why? Because There's no institutional buyers on weekends. That's why you get the CME gaps. That's why you get a lot of stuff. Can this be the catalyst of institutionals jumping in, perhaps, right? So when it's a lot of this is mainly retail or manipulations, right? Think about it from that perspective. Who is actually playing on the weekend? So that's why I'm very like, especially on a Monday, you know what I mean? Like when everything is rallied, you know, statistically speaking, there hasn't been too many continuations on a Monday. So obviously that's better to wait and see. So what I was waiting yesterday, right, is to this candle to close above this level. And why this level is important. So if you look at where everything sheet itself, right, we have this massive wick, and this area right here is the breakout structure. So we haven't actually been able to break a structure. So from the smaller time perspective, we're still bearish, right? So lower high, lower high potentially here, right? So you have both scenarios playing up, right? You have higher lows right here, but you do have higher low that it could do something like this. Is that still the cards? Yes. You know what I mean? So obviously that's kind of where I don't know where we're at the moment, technically. You know what I mean? It's really tough to play this game at the moment because obviously you have both scenarios. You have longs and you have shorts playing out this game right now. Which one is it going to win? Who knows, right? At the moment, I don't know. Now, more than likely, right, if we start sort of crossing above this line, right, then you tend to think that shorts will say, oh, fuck, you know, I think I'll better off start closing positions. And then that's when that bulls win. Same scenario here, you know, things start going down, right? And then bulls start closing positions because obviously they're going to get retested to these areas right here. So that's when they get tested. And you guys, that's why I asked those questions because, you know, for instance, Todd mentioned 105. The 105 region is when he says, fuck it, you know, I don't want to hold anything. And Graham says 100, right? So those are the areas to look for, right? In terms of either you want to buy or want to sell. That's why, you know, I decided to actually, you know, close pretty much all positions because I don't want to be biased. And probably that's kind of one of the mistakes to, you know, in trading is to be biased, to say, oh, I think this is going this way. I think this is going this way, and not letting the price action actually tell you where the market is heading. Okay. And I've been there, like every week I try to remind myself this could take different possibilities. Which one is the more likelihood to happen? That's kind of what I'm aiming to. So, and if you don't hold any positions, then your head is clear to do that. Mm-hmm. When you have positions on, tell me if you know, when you have positions on, then you always hope that it will result to the upside. Your bias, your brain is subconsciously speaking, your brain is looking to say, this is going to resolve that way because I have my positions and I hope that that's going to be the case, right? Mm-hmm. So obviously, you know, having no positions on was very handy for me to just have a clear mind, you know what I mean, in terms of this could go both ways. So with that being said, right, so we have this line here in terms of, so let's go through the possibilities in terms of breaking above or breaking below. So in my mind, right, what I was looking for is a deviation of these lows right here. And I did talk about it last week, right? What is the next sort of range that you guys think that the market will get retested? And the latest one happened right here. That was on a Sunday. Yeah, that's the lowest on the Sunday, June 25, right? June 25th, sorry. So that gives us this level here to play around. So the 9,800 level, okay? So why these ranges are important? Because these ranges are what the big players are looking to buy. They're not looking to buy in the middle of the range. They're looking to buy in extremities, right? This is my line of the sand right here. This is where if market gets around this area, the 9,800, I'll be buying. Why buying? Because I'm still bullish, right? So obviously that's my macro sort of directionality. Why? If I go to the weekly time frame, right? If I go to the weekly time frame, trend is intact, believe it or not, yet. However, we're ranging above here, so we have like, call it accumulation, call it price discovery, looking for value, but this area right here, the 9,800, it could give us more liquidations, right? And then a deviation. And that will be a really interesting place to actually buy spot as a swing trade towards the high. So that's kind of where my line of descent will look like, the 98 sort of area. Now, if we start losing the 98 and we don't reclaim this, then we start becoming short, right? And this is a situation that I'll be looking to show the market heavily. You know what I mean? So that's I'm looking at two aspects of the spectrum from the price perspective, right? So I hope that makes sense, but I'm still bullish. My plan in terms of swing trades will be around this area right here, the 98, if we get it. If we don't get, so we have those possibilities. Sometimes, right, what happens with markets is you get front run. So this is a really good indication of a front run. People buying, this level. So if you look at the daily here and the day that happened, the liquidation thing, a lot of people were waiting for another low, but it came down to this area right here, a little bit just above that price. So that means people are willing to buy at this area, right? So that's my first indication that we're still good. Can this become a range? Yes. So we have those possibilities. So we have a possibility number one, which is a range, which I think right now, the way I see market behaving, I think range could be the most likelihood, right? I could be completely wrong. So I could, in terms of possibilities, I'm going to be playing this as a range, right? Then we have option number two, which is, price breaking above that, and automatically is going to start liquidating a lot of shorts. And I'm going to show you some shorts that are around the market. And, price below this, probably it's not a bad idea to short. Like if you start seeing that the market is going but then obviously have in mind that this level here, right, could be a really good price for institutional buyers to actually come in heavily. Okay, so those are the levels that I'm looking for. Now, those levels, they don't need to play out, right? You know what I mean? This is just the levels that I'm looking for. So once I have my levels, then I use, open interest and spot volume cumulative to see if I'm correct or if I'm wrong. You know what I mean? So obviously that's how kind of build the thesis around this, because I say that if I'm going to buy 98, that doesn't mean that I'm right. That doesn't mean that institutions are going to be buying here. If I see evidence of that happening, then I join in. If I don't, then we might just start going below it here and go back to 80K, which is, I think Melinda mentioned that. Can that happen? Yes, of course, that's still on the cards, right? But that's where I'm at the moment, right? So I just have to play with those options right there. Okay, so essentially I'm leaning towards the ranging, right? Until we break these levels here, especially the 112 area, or buying heavily at 98,000, right? Would I short this one? Maybe I will play some shorts, small time frame here and there, but then obviously have in mind that there is a lot of appetite still for crypto, even though, and it shows that over the weekend, we got a pullback. But these levels here, we can actually start looking for lower prices. That's kind of what I'm saying. Now, let's go now to open interest and assess what we see there. So this is it, Bitcoin. All right. So the first analysis that I do is in lower time frames. Okay, I don't do the higher time frames first. I always do the lower time frames first, because obviously, if you do have sustainability in the lower time frames, that's going to translate into the higher time frames. Okay, so start from the lower time frames, right? So let's go through now in terms of what you see in terms of open interest and price action and all that sort of stuff, but from the small time frames, right? Why? So right now, right, if you see a massive amount of open interest rising here, right, like you can actually see the open interest rising here. Now, what we have to ask ourselves is, are these shorts or longs? That's always with open interest, always ask yourself, are these longs or are these shorts, right? Because open interest is basically, like I say, I keep repeating it. And I always repeat it to myself, because sometimes you get biased. Oh, open interest going up, price going up, then automatically, you think that way. But always ask yourself, open interest is just the amount of contracts being open in the market. That doesn't mean it's long or short. What we're trying to figure out with the price action is this longs being open or shorts being open? Number one. If that's the case, then you need to put it together with the community spot delta, right? And ideally, right, in a really good setup, you want everything going up. You want price going up, you want open interest going up, and you get delta going up. That's a massive recipe for breakouts. That's when you find that everything is aligning. Okay. Now, do we see that at the moment?
No.
Not at all. So we see that spot volume is actually going down. What that means is that there's no buyers, there's no heavy buyers here, right? Like there's not a lot of buyers. So obviously, whatever price action is happening is actually driven by open interest, by leverage traders, right? So the reason why we start seeing a lot of open interest right here is because we do have liquidations, right? So what that means is that people that shorted, right? Then, when we have an influx of spot, like this is a really good setup, by the way. If you catch these in small time frames, you can actually just make a really quick buck right there. Anyway, so this is, spot volume came through, liquidations, and now we start seeing some more liquidations here, right? So this price effect is based on these liquidations, and you see liquidations up and down, up and down. So this price is not, this open interest is not telling me anything. You know what I mean? This is just to say that there's not telling me, there's nothing peculiar to jump at me to say go long right now. You know what I mean? Because the market is not there for me, right? I'm not reading this. Sometimes it's going to get really easy to read, right? So for instance, let's go back, and sometimes it's going to get really hard to read. So for instance, no, yeah, it's got to go below. Just right before the just gonna show you something that could be really simple to read. And then if you get those kind of setups, that's when you actually go in. No, this is not. This could be clear, right? So obviously after the liquidation, we have liquidations here, bang, huge amount of liquidations. Then we start seeing a spot coming through, and you start seeing open leverage coming through. Definitely, you see the market reacting right there. Now, the problem is you don't know until when they're going to start breaking down, you know what I mean? Like the spot volume. And the spot volume is the one that actually drives the whole price, man. So what you want to see, right, is spot coming through heavily and then being sustainable for at least, you know, a couple of hours. Then that's going to be translated here in the 6 hours sort of behavior. And that's when you know that the market is strong, you know what I mean, towards the upside. You know, that's kind of what I'm looking for, right, in terms of strength, right? Until then, I can definitely see this chopping around. Why I see this chopping around and why now my higher possibility is ranging? Because you see all these behaviors, man. You see liquidations to the up, you see liquidations to the down. This is just leverage traders jumping in and out, hoping that this is the bottom. You know what I mean? And then when I see that, then you can short the top, long the bottom, and more than likely, if you're in range, then you should be all right. You know what I mean? If you're not in range, then but then identifying this is tough. I could be completely wrong. You know what I mean? But then when I start seeing a lot of this chopping around, is you know what I mean? I just don't give me the confidence to actually say this is the bottom right here. You know what I mean? So this could be a little bit longer. You know how long? Because this is how market makers actually gather liquidity, right? This is what market makers just go on and say, oh, you know, there are a lot of buyers here, let's short and get liquidated, and then they start getting liquidity to either direction, right? So yeah, that's basically in a nutshell how to read this. But then obviously, you know, it takes practice. It takes practice. Now, let me show you what I was talking about in terms of small time frames, right? Because small time frames become very, very, very obvious, right? The open interest, right? So this is when I do all my main scalping. So check this out. Right here, right? You see an influx of open interest coming through, right?
Mm-hmm.
These are shorts being open. Definitely, right? Because obviously on the
price is falling whilst open
exactly,
interest is rising. Okay.
exactly. So on 1 minute become very obvious. Now, if shorts are opening in this range, right? And this is just like a scalping class. If shorts are opening in this range, when do you think they're going to start closing their positions? Probably if they go around this level, or you know. So as you can see, shorts have not sort of closed yet, and market is still going down. So and open interest keeps going up, right? There's no liquidations to the upside yet, right? Only liquidations to the downside. So on the 1 minute time frame, right? This is only 1 minute time frame. That's why I do not recommend you guys do this. I do this pretty much all the time. If price probably starts going above this level here, these shorts are going to get liquidated, and then market is going to come down, and then it's going to get choppy as, you know what I mean? But you could actually start leveraging this information to get a little bit more of the rate of the market long, like in the higher time frame. And what else do you see here in terms of spot volume on the 1 minute? You see a massive drop, a lot of people selling. They're not holding positions, they're not buying, right? So obviously, once you see this, then you know that the market is driven by pure leverage trading, okay? And then that's, you know, if you know how to play the game, good, but then that's when you actually get chopped out a lot, right? So that's why I say ranging could be a possibility, right? Like if ranging is my higher sort of analysis out of this, right? So what my range is going to be, like if I now open this in sort of smaller time frames. So my range could be from here, right? And then going back to 200 EMA, then we can chop around that area until we build value, and then don't know if we're going to start falling below, probably. But then that's how I'm at in terms of that's how I'm reading it right now. You know what I mean? So
Interesting.
yeah,
Really
that's,
interesting.
so always have in mind that not because you think of what the market is going to do, it needs to do it. You always have to have evidence of your uh, thesis, positions, or whatever, right?
Mhm.
Align with the price action, open interest, CVD volume, which is the main sort of drivers that I use, right, in terms of indicators. That's just how
Okay.
I read the market. Okay.
That's really interesting, man. Just one last thing on this. When I was looking around to answer, try and answer this myself, I'll just put the link in the chat now. Like on CoinGlass, they have like a long short ratio.
Mm-hmm.
What would be the reason that these wouldn't give us more information as to kind of direction? And I'm asking this from more of a I don't really know what I'm putting in front of you here type of question.
Yeah. So the ratio is how many shorts, how many how many longs and shorts are at the moment, but have in mind that let's bring this into the 5 minutes. Okay. So, and the last, these things work really good on the small time frames,
Right.
because you will see that these actually change quite a bit, right? So, and why? Because this, the way that they actually take these readings is by the order book, right? How many orders are in the order book to cover the
Okay.
shorts and longs and things like that. So I don't have much experience with this, but you tend to see this as an invert of what's going to happen. Tend to. Obviously, I could be completely wrong, but I'll do more analysis on this because I know where you're heading in terms of how do you actually know how many longs and shorts are. There's some other tools. Probably I'll bring the next call. All the, there's
Okay.
some interesting tools to actually see what type of orders we have in the book and things like that. But that's also that's more related to scalping, to be honest. But then at the end of the day, that triggers the buyers to buy or triggers the buyers to sell, the sellers to sell. You know what I mean? Like that's kind
Mhm.
of at the end of the day, the small time frame is it has a ripple effect in terms of all the other aspects. So that's why, I like small time frames. Sometimes it's really tiring, but that's why, but I'll do more digging on that. This is the only thing that I can give you in terms of analysis
Nice,
between
man.
long and short ratios. Okay.
Awesome. Thank you, man.
Right. So with that being said, yeah, that's where I'm at, man. In terms of Bitcoin, this kind of in the no man's land. If you do want to play some games, probably doing ranging could work. Or Ethereum, same deal, right? So Ethereum, look at this candle yesterday, it closed, very choppy. You know what I mean? Like Ethereum is a different aspect because now we haven't been able to break above the 4,000. So even though with the weekend liquidity, right? Yesterday on Monday, we tried to break above the 4,000, we failed completely. So I'm kind of not liking it. You know what I mean? Like in terms of if I look at Ethereum here, right? There's still no no sustainability in terms of spot buyers coming in, and that's how do I know this now? Because when you go into the flows, right, the ETF inflows, then this is Bitcoin. So yesterday, you start seeing, I don't know, this today, yeah, you start seeing a little bit of inflows, right? But the day before, and that was on Friday, you do have a lot of outflows, right? And then you can actually see here the outflows coming through, right? Let me just, can I make this bigger? No. Anyway, so this is kind of, I'm not saying that this is the after effect of this, price action coming through. You know what I mean? Like so this is kind of my first sort of uh go to, right? To start taking positions, right? Especially on leverage. If you spot's a different game, man. Spot, I will say, in terms of spot, you start buying. You know what I mean, as a DCA sort of deal. But in terms of leverage, yeah, because you do want to get position, you do want to have your spot, your stop losses in place. You do want to have your risk. So that's why I spend so much time reading these things, man. But this is kind of my go-to. The interesting aspect now is that the funding rate starts to sort of resetting. Okay, and the funding rate, you mentioned something about the funding rate earlier, and the funding rate is basically, it tells you, you know, if it's positive, right? If the funding rate is positive, it means that shorts are paying longs are paying shorts, and if it's negative, is longs are being paid. Like, so obviously now we start noticing a little bit of a reset here. So that could be an interesting, an interesting place to hold, right? And if I see a little bit of a spot volume coming through, maybe that will give us that impulse to break. But until then, I'm still on range. You know what I mean? I'm still playing the range. Okay. So that's what that's kind of what I'm looking for. Okay. And then obviously be mindful that obviously market is going to move up and down, up and down, up and down a range. That doesn't mean that the price is going to get away. It might, and if it does, so be it. You know what I mean? But then obviously, yeah, it's just really choppy, man. And I keep reiterating that obviously what happened on this day is not the regular buy the dip event. You know what I mean? Like, it's not that it had a lot of implications on of the markets, of a lot of players in the markets in terms of infrastructure, how exchanges, played out, the liquidation. So there's still a lot of fundamentals that are being worked out as we speak, right? So yeah, not planning to do anything major in terms of positioning hugely amount of money in leverage, but I might just start looking for some plays, because obviously there's some tokens that are actually outliers in terms of things. So, but I'll be playing like in and out, in and out, in and out. That I won't be holding much, the positions for long, if we go into some positions. So yeah.
Nice. So it's still really a kind of a hands off the wheel situation.
Technically,
Sort of
yes, I will say.
50-50. Hmm.
Yeah, it's a 50-50. At the moment, it's a 50-50. So you have to sort of play the odds, right? If we go Bitcoin, you know what I mean? Like, I will say range will be my 60%, and then we have 20-20 kind of, right? 22 upside, 22 downside. So I'll be playing more the range bound game, you know what I mean? Because that's kind of what I'm seeing, and I could be completely wrong. But then that's kind of the thesis that I'm building behind it. Why? Because I just told you all the reasons. Here's another important metric that you guys, so I did talk about the HyperDash a while back, right? I think the HyperDash, for those ones that don't know, the HyperDash is basically exposes all the positions from Hyperliquid. Okay. And this is the advantage of Hyperliquid, because Hyperliquid, everything is public, everything is in a public domain. So this dashboard takes everything that is going on Hyperliquid. You will not be able to do that on Binance or Bybit or any centralized exchange. And the reason why is because all the stuff is private on their end. You know what I mean? You don't know how many positions they are. You don't know how many, unless you have the API and things like that to get that information easily. But still, there is a lot of information that is not provided through the APIs and things like that, right? In terms of market makers. HyperDash, on the other hand, is actually completely transparent in terms of it takes all the information for Hyperliquid, right? And you get these dashboard, which is it's called the liquidation map. Okay. So the liquidation map, it tells you the levels, that people are going to get liquidated, right? So that's why I say that 112 is a significant level. And the reason why is because if a lot of volume start coming through and touches this level, the 112, 593, then all these shorts are going to get liquidated. Mechanically speaking, market is going to have the upward momentum. Okay. Same thing as longs. So these levels here are very important. The price of longs liquidations are 109, right? So if market hits this level, then those levels are very important, right? So if you trade around those levels, I think, you could find really good momentum there. In the middle, it's like a 50-50 chance, man. It's, toss the coin and do whatever, right? So this is something that I keep in mind, in terms of the heat map and how what are the main levels that are important, because this gives you a guideline of where the main players are, what the main players are doing, right? Also important here is market summary. You have the shorts that are being dominant. Okay, so there is more shorts at the moment that are being profitable than longs. Okay, so when markets start coming down, and this is to answer your question in terms of, when do you think shorts are going to start sort of taking profits, right? This is important because if you see that the short dominant and all the shorts are profitable, then once they start closing their positions is when the market is going to come back in a way. You know what I mean? So this is really helpful. I did share with you guys this address. It looks like this is the address that shorted the market heavily on the liquidations. I'm not entirely sure, but I'm still tracking. But the interesting thing, this has been reported as a delta neutral, and what that means is they might buy, they short the futures and they buy the spot and things like that. But I don't know, it hasn't been confirmed. But this is the one that I've been showing you guys in terms of that is this wallet here, right? Talking about a huge amount of money that it is shorting the market heavily, right? So it's a lot of pressure on the market at the moment, right? Until I see enough of these shorts, then, or if a bigger player come through and start longing the market, then this guy's gonna get fucked, and then pretty much the market is going to just go up. You know what I mean? But you have to take into account this amount. This is where this guy is going to get liquidated. So he's, he has a short 180 million, right? And he's going to get liquidated if the price goes to 198. If he like, let's say market goes up, go to the next range 124, he can actually add another short and extend this to 216 or whatever. So, right. So the only thing to highlight here is that the dominance of shorting positions and this guy is being profitable. So obviously that's why I see there's a lot of pressure right now. So it's not as easy, it's going to need a lot of capital to break these levels. That's what I mean in terms of why I think it's ranging. You know what I mean? That's another way for me to build up my thesis, right? In terms of why do I say we could be ranging, why I say that this is not the time to long here. You know what I mean? I see a lot of pressure, man, in the market at the moment. So if you combine everything that we talked to, like now HyperDash, you can actually see the positions here. You can track this every single day, man. Like, and compare the positions that this guy's holding. And then on top of that, you go to the spot volume and say, shit, there's no one buying at this level. More than likely, right? More than likely, you say, very, very tough to break right here, right? You know, you're gonna need a lot of capital to break this level here. Can that happen? Yes, of course. You know, massive buying here triggers shorts, liquidations. Can that happen in an instant? Yeah, it can. But until I see evidence of that, then I'm still, you know, hands off kind of in a way, right? Just looking at the market.
Wow.
Let me just share this address here because that's the one that I'm following. It is on one of the videos that I did, and I put those ones there. But this is really helpful, guys, in terms of Hyperliquid, and you know, obviously has a lot of shorts, man. Shorting Hype, 50 millions on Hype, shorting Sol as that pump. So this guy is shorting the whole freaking market, all the strong stuff, right? Interesting, because he could be for real. You know, there is this report here that says this is being reported as a delta neutral, and what that means, and as a delta neutral trader, is that you know, you buy spot and short futures market, and then you know, you basically, whatever happens. You know what I mean? You just basically collect funding fees or things like that. So obviously, that could be it, but still a lot of pressure, man. Still a lot of pressure on the market. So that's something that I'm still a little bit conscious. So yeah, I think that's it in terms of macro, man. So yeah, I don't know if you guys have any questions before I move on into stuff that I wanted to show you as well.
Man, that was fantastic, man. Real good deep dive.
Right. Okay. So now stuff that I had for you guys. The first one is Launchcoin. I'm still holding some Launchcoin in terms of stuff that I bought earlier, but I don't know if you do. If you do hold on Launchcoin, they switch into they're talking to Believe app. So make sure that you go through the transition, right? Because Launchcoin is going to be a different token. So it's the upgrade is live. So you will receive the Believe tokens. So I'm still bullish on this project, but then I'm gonna wait until the new token is live and all the sort of stuff to see how the reaction of the price is. So if you hold this, please you know, make sure that you go through this. Otherwise, you might lose your launch coins or whatever, right? So that's number one. Another one that I was going to show you is that I did find another interesting token to airdrop. That's something that you could do right now in terms that the market is doing like that. So you can actually, you know, do the airdrops of extended. So how do you do airdrops? Just basically open an account, put $500 and start opening and closing trades. You don't need to be profitable. You don't need to be, you know, just randomly if you want to, you know, and that's how you generate points. So that's something that you could do. But this new one is called Vest. And this one, it looks pretty interesting because Vest only focuses on stocks and is not crypto. You could basically you could use your crypto to trade stocks with leverage. It's not buying the leverage. It's basically doing it's like a perpetual funding rate. It is like a perpetual contract, but using stocks. You know, you have Nvidia, Microsoft, Apple, Amazon, Google. So it's a very interesting proposition. This is brand new. Have in mind that liquidity is low. So they're looking for people to go into trade. So they do have ETFs as well, but you can actually trade, right? They have Forex, right? Which is you can actually do Forex using your crypto, which is interesting. And obviously you do have the basic crypto stuff as well, but they are focusing more on Forex indices and stocks, right? So obviously this is an interesting one if you do wanna you know, have some airdrops or things like that. But this is something that I found, and I think I'm going to start doing some positions here and there just to see how they go. It looks pretty interesting. Well, it's well backed. Like it's backed by Jane Street, Amber Group, and QCP Capital. So big players in the market, and this is what I look for, to see if that's actually it could give you a really good airdrop, when they actually jump. So yeah, that's pretty much it, guys. This one, best markets. I did not have anything else for you. So yeah, that's, I don't know. You have some questions, or oh yeah, one more thing right here. This is why as well. In terms of ETH, right? And you guys have this link here, right? And when do you know if it's going to start gaining a lot of traction? When the the staking comes back in, like when the staking sort of is bigger than the queue to exit. And at the moment, right, even though we have a good sort of staking, then still there's a lot of people on staking, and then if they do, they're going to put much more pressure on ETH. So I'm still, this is just big stuff that you can actually look into it to see when do you want to actually play big, right? And that's kind of the biggest thing. When do we actually just go in really heavy with leverage, and the market is not there, man. Can be there tomorrow or then in a couple of days, yes. But until then, playing it quite easy, man.
Nice. Smoke them if you got them. Mm.
So that's in terms of macro things that I'm watching. I'm watching things like Sora. Sora has been really freaking choppy, but choppy is good, right? If you do want to play it, the range, like I say, like this range, you short here, you long here, it's giving you like, this like 20% ups and downs. So things like this could be pretty interesting. You know what I mean? So I'm looking at Sora. I'm looking at new projects. There's new projects called Yield Basis. I think I did talk about it. This could be a very interesting proposition. This is a very interesting project. Obviously, it was launched in the wrong moment, but what I'm going to be looking for is when people stop selling, and this could be a really interesting spot hold. Also looking at XPL. So XPL still, I think is going to have a second opportunity, but depends of the market conditions, right? And obviously it's just been right now being pretty dead. I'll be looking to add spot at this level here if we get it again. I don't know if we're gonna get it, but that's one level that I'm looking for. And another one that I'm looking for is this one right here, right? Because this is kind of this is the range. Like if we talk about ranges, this is the actual range of this thing. So if price comes back down here, sell here, buy here, sell here, things like that, man. Obviously, this is very short time time frame trading, but this is stuff that I'm looking, in terms of until the market sort of decides, until the market decides, essentially, the stuff, little plays that you can actually do, right? But then, yeah, don't think that market is going to recover quickly, because I could be completely wrong, but it's going to take a little bit more time, by the looks of, right?
That's all right. You just tune into those lunatics on X. They're telling that we're going to have another 2 years of the bull market.
We might, because the thing is, things can shift quickly, right? So that's why I give you all the tools, because if you start seeing, right, if you start seeing the market, like, Ethereum staking is coming back online, all these shorts start closing in, and you have the open interest, the community coming back up. We're on, man. We're fucking on. We don't know when. That's the problem, man. You know what I mean? Like, and that's kind of the interesting thing. We don't know when, man. I'm just doing a guess that it might take a little bit longer, but that doesn't mean that it's going to take longer. We could have, I just show you the map of the liquidation map. If we get to 112, more than likely, all these shorts are going to get liquidated. So that will create a cascade of buying opportunity, right? And that could be perceived as market is on, man. And when people start sort of buying, then this thing is never stop, right? So this is something very important to keep an eye on, right? Like the heat maps, because why market is actually, market, like if we hit the 112, what you want to see, make sure that you don't AP in. You want to make sure that you see the spot buyers coming in through as well at that level. If you don't, stay away. It could be, another range, but then that's kind of in a nutshell, man. That's kind of in a nutshell. But until then, I do like to short this market now, man, right now. You know what I mean? It's not a bad idea to short this thing. Why? Because all those reasons that I just gave you, you know what I mean? Like, there's no strength, so obviously you do higher probability bet right now could be a small short right here. You know what I mean? Like short Bitcoin or short stuff like, ETHFI or Pendle or shit like that is going to get hammered. You know what I mean? Like that could be really good, interesting place. So yeah.
All
So
right.
yeah, it's interesting, man. Interesting price action.
Well, you say interesting. I'd just say it's confusing.
Oh man, it's confusing as hell as me. That's why, I think about it that you want to sort of build, like if you're an investigator, right? And you sort of want to investigate, when to buy and when to sell. And if you go through that lens, then you can actually say, oh, all right, you put in like evidence together. You know what I mean? Like, okay, this is the evidence of this is the evidence of that. And then you make your call, and then there's two things that it can happen. Either you're right or you're wrong. And if you're right, then you basically are a good investigator. If you're wrong, then you have another opportunity to assess your evidence and say, oh fuck, what happened here and things like that. You know what I mean? Like that's kind of, yeah.
Gotcha. Well, that's a lovely way to end it today. Great call, Maurizio.
All
Thank
right,
you,
guys.
everybody, for the chat. Speak to you soon. Ta-da.
Bye.